There are many definitions of financial inclusion, reflecting different aspects of what people think is important. Let's look at some of these definitions, starting with two simple ones. First, access to and use of financial services. Second, the proportion of individuals and firms that use financial services. It is essential to have access to financial services for you to be financially included. However, these definitions also highlight the importance of usage. As we will see in this module, many people with access don't actually use the services. Without usage, the benefits of access are limited. Let's consider another definition. Access and usage of a broad range of affordable, quality financial services and products in a manner convenient to the financially excluded, unbanked, and underbanked, in an appropriate but simple and dignified manner, with the requisite consideration to client protection. This definition highlights several additional aspects of financial inclusion. First, people need to access and use a broad range of financial services. We wouldn't consider someone with a savings account but no way to borrow as fully financially included. Second, it emphasizes aspects such as quality, affordability, and convenience that are important if financial services and products are to meet people's needs well. Third, it states that financial services must be provided in a dignified manner and ensure client protection. Let's consider one more definition that highlights that increases in access and usage must also be sustainable. Financial inclusion means that individuals and businesses have access to useful and affordable financial products and services that meet their needs. Transactions, payments, savings, credit, and insurance, delivered in a responsible and sustainable way. To count, increases in access and usage has to be sustainable for both the individual and for the financial system. For example, if an increase in credit use leads to over-indebtedness and a financial crisis, followed by a loss of access, we wouldn't consider this an increase in financial inclusion. The key takeaway is that financial inclusion has many important dimensions. I'm sure you can think of other properties you would include in a definition. When we want to measure financial inclusion, we often focus on access and usage as data on these variables are available. However, the other aspects we have highlighted are also very relevant. Without financial products and services that satisfy these aspects, it would be hard to increase usage that meets people's economic needs.